Hello, everybody. This is Toni Turner, and welcome to the Market Now as of Friday, September 17th at about 3:15 p.m. Eastern. Well, the University of Michigan said its U.S. consumer sentiment steadied in early September after plunging the month before to its lowest level in nearly a decade. Consumers are continuing to feel uncertain toward the future amid a stiff bout of inflation, the survey showed today. And that could be true right now. So let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, because most stocks will follow the S&P 500, so we watch the S&P 500. We're going to look at this daily chart today. Now, the SPY closed up here, the newest all-time closing high back on September 3rd. It has held so far at $453.08. That's about $45.30 on the S&P 500 itself. Since then, price has started taking a dip and heading back down to the 50-day moving average. Now, when I captured this chart today, the SPY was trading at $441.77. That is about 2%, a little over 2% off of down from this all-time high. And now, as you can see, it's trading below the 50-day moving average. That's the green line. The green line is the 50-day moving average, and that's coming in at $442.72. Price has already fallen below the 20-day moving average. Not so bad, but if we look left on this chart, we see that it's been a good 5 months since the SPY dipped down below. In March, it dipped down below the 50-day moving average and then jumped back up again the next day. That's okay. We want it to jump back up, and we basically want the SPY to be trading above its 50-day moving average, certainly a lot of the time, because that means that price is bullish. Now, as you can see, the SPY has moved up this 50-day moving average, and we've talked about it before, and it did dip down to this August 19th low here at 436, but then it bounced back up again. Now, though, it's pulling back down a little more, and as you can see here, if you back up and look at this chart, the candles are getting a little more red. Price isn't opening and closing just a little bit during the day, close to each other. It's starting to get more action here. We could say the bears are pushing it down, the bulls are pushing it up. That's true. It looks like the bears, though, are getting a little more action here. How do we know? Beyond the candles, we look down at the volume, and we see like 6 days here, pretty darn strong volume. So that tells us right away that there is certainly some selling in the market. Doesn't mean it isn't going to stop, but it's definitely taking place right now. So resistance will remain up here for the moment at 454. But again, so far today, price has fallen through the 50-day moving average down to 441.77. You want to keep an eye on the 50-day moving average, and right now that's coming in at 442.72. Call it 442 if you want, but you want to keep that number on your screen or close to you, because if the SPY decides to close 2 or 3 days below the 50-day, one's not so bad. As you can see, it'll bounce. It has bounced so far, but if it closes 2 to 3 days below the 50-day moving average, then we could see another leg lower. Okay, so we do have support here down again at the 436. We have more support here, potential support, more potential support here down at 422. I'm not drawing a very straight line, am I? 422, then we have another potential support at 417, and then down to the 200-day moving average, the black line coming in here at $409 and change. So because many stocks in the market, 4 out of 5 will follow the S&P 500 lower, we do want to keep an eye on this and protect all of our positions. Now, we do know that seasonally speaking, September can be a very dicey month, so don't be surprised. Keep an eye on your stops and please trade wisely. Our next chart today is a chart of the Invesco QQQ, symbol QQQ. Of course, this particular ETF represents the NASDAQ 100, a major index in the market, with including all the big momentum stocks like Apple, Amazon, Alphabet, and Facebook. Now, the QQQ made another new all-time closing high back here on September 7th at $382.11. Now, when I captured this chart today, the Qs had moved down from there, and right now it's trading at $373.33. We can see that it's fallen below the red line, the 20-day moving average. That's not the end of the world, but we do want to keep an eye here on the 50-day moving average, which is coming in at 369.62. So if you want to call it 369, that's fine, but that is a point that's very important. Again, the 50-day moving average should the QQQ move below it. Resistance does remain up here at 383. We got that. Below then the 50-day moving average, we have the support at the August low, August 19th low. It had a low just like the SPY did, and that it comes in at 359.96. Call it 360 right here. So that's potential support here should the Qs fall below the 50-day moving average. Potential support here at this 360 level. Then we have more nearby support here, potential support at 352, and then of course down to the 200-day moving average at 337. Let's hope we don't need to worry about it getting down there. We certainly don't want to. So let's, in the coming week, just like the SPY, keep an eye on the QQQ, see if it can stay above the $369 level, and if it can't, then we may have another leg down here. So again, if you don't know what's going on and you feel a little nervous, just go to the sidelines and stay there. There is nothing wrong with doing that. Cash is a position. Our final chart for the day is the Invesco Dynamic Biotech and Genome ETF, symbol PBE. Now, I chose this chart because biotech stocks and actually pharmaceuticals are the same way. They don't care as much what the rest of the market does. They kind of go along on their own clinical trials and so forth. Now, of course, when and if I should say, the stock market really turns south hard, then most indexes will follow. But by and large, just in a slightly dicey market, the biotechs will trade on their own news, on their own position. And you can see here, if you look left on this chart, notice these great big long red candles. Now the PBE has 31 holdings. Repligen, Catalent, Incyte, Amgen, and Gilead are some of its top components. It made a recent high back here in February of this year at $84.83. Then it did pretty much a face plant down to this low down here in March at 57. Just boom, that was ugly. Then it started recapturing some of its gains here and actually made a kind of a little erratic but triangle nonetheless. Got back over its 50 and 20-day and 50-day moving average right then made a high in April of 79, fell back down to 67 in May, back up to 79 in June. So this 79 has become quite the resistance price for the PBE, quite the resistance level. So it went back down to 70. Where am I here? I'm sorry. down to 71 in July. That's down here. But now look, we've got a higher low, and look how neatly it did this, coming down to the 200-day moving average again, using that line to create a pivot and thus a trend line support. So then by the end of September, or by the first part of September, it's back up to 79 again. And notice how the candles are getting more orderly as opposed to how they were back here in February and March, when everything was just a hot mess. So this was all a mess in here, very erratic, not where I want to put my money, and now it's turning into a much more orderly pattern. Now, biotechs are never the world's, they don't trade like utilities, all nice and even all the time. They do certainly get quirky and cranky and happy, and so, but it is looking a lot more orderly here. We've got these 3 lows here, 4 lows total, walking up this trend line, higher lows and higher highs, back above the 50-day moving average today. When I captured this chart, the PBE was trading at $77.03. It's just below the 20-day, but the 20-day is moving higher, so that means it provides less resistance. We've got the 50-day moving average coming in here at $76.11. And we have this 200-day moving average, which has acted, again, as I said, like a really nice trend line for quite some time here. That's coming in at 74. If in the coming week the PBE can stay above the 200-day moving average, that's coming in at $74. If in the coming week it can stay above the 200-day moving average, and as long as the overall market doesn't get too cranky, I will add a small position to my trading portfolio, and I'm going to put my initial stop down here at 74.50, just below the 200-day moving average. If and when the PBE rises up above here and goes over 79, breaks above it, I will add to my position, and of course by then I'll be trailing my stop. So you may want to keep an eye on the PBE during the coming weeks. Okay, before we go on to final thoughts, please know that if you'd like to become a more successful trader, please check out my trader training programs. You will like my simple strategies targeted to swing trading, trend trading, bottom fishing, and many, many more. These programs can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen, or easier still, just click on the orange button below. And now on for final thoughts. Our question today is, what trading patterns do I have that limit my success, and how can I eliminate them from my trading day? Now, if you were to review your last 5 trading days, could you identify thoughts and patterns that are holding you back from making higher profits? Here are a few that might just sound familiar. Okay, we plan to day trade, but we are not prepared. So we jump into a trade late and we face an immediate loss. Or we neglect to check a company's earnings date, that's important guys, and enter right before the news comes out, which might be great and might be horrible. Or worse, we forget to check and sell short the stock. I only did that once in my life, but it was very painful. I sold short a stock that was coming out with earnings. The earnings were fantastic, and I got squeezed and lost money. So again, then the company comes out with good earnings, and we get caught in a short squeeze. Or maybe we chase stocks and enter into new positions too late, right before it's going to roll over a little bit. We execute revenge trades. I'll get back at the market. Not a good idea, because we're never in the right mind frame when we do that. We jump into trades without a written out plan and without identifying risk. Not a good idea. Or we double down on losing trades. That works every now and then, but not all the time, certainly, and rarely. Or simply put, we ignore our protective stops. So in reviewing the bullets above, be aware of the market's overall trend and your stock trends. Know what the market's doing. At least we just went over the S&P 500, so now you know. And know your stock's trend, the sector's trend that it's in. Beyond that, review your trading plans before you enter. Know your company's earning date and avoid selling short if the date is closer than 2 weeks to your entry date. Also, please do not enter trades late or execute revenge trades. Enter every trade only with a written out plan. That's the way you're most successful. And identify your risk on paper. Where's my stop? How much am I risking on this trade? Please do not double down on losing trades, and know that stops are insurance against losing money, so please use them. Finally, the only way to change behavior is to make a conscious decision to do so. And when we do recognize limiting thoughts or behavior, we need to define them. Don't accuse yourself of anything, just define it and then replace them with positive thoughts or actions. So as we head into the fourth quarter, let's clear out old thoughts and behaviors and let's replace them with those that help us achieve trading success. Finally, please know that this is a great time to check out my trader training programs. To see all of my online trainings, simply go to the link on this screen or click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.